Tēnā koe and welcome to the revision session number 9. This session is on the balance sheet, so at the end of today the idea is to understand everything there is to know about the balance sheet. I'd like you to get again your 1B5 book, and if you can turn to a new page on there, and each page has got 32 lines in your 1B5, and so what you're going to do today is draw up this balance sheet here. So I'd like you to draw up in the top line of your 1B5 balance sheet for Aramoho Mechanics as at the 31st of March 2022, and in the third line down you put assets. Note also that we're going to require 4 columns. First column is larger for the names. Second, third and fourth columns are where we put our figures. To start off with a balance sheet is called two names. One's the balance sheet or the statement of financial position. Basically it's a photograph of a business at a point in time. So that's why it says as at the 31st of March, whatever the date is. So it's a photograph. What are the assets and liabilities that we have at a point in time? That's a pretty key one. So as opposed to the income statement or financial performance, which is over a period of time, this is a photograph at a point in time. There are 3 major sections of this, and the first major section is assets. So in the third line down you've got assets. In the 18th line I'd like you to write less liabilities, and if we scroll right down in the 28th line you've got owner's equity. So these are the 3 key important sections of the balance sheet. If you have any income or expenses in here, the marker will give you an F mark, a foreign item. That means that you cannot get excellence for this question, and it also means that if more than one, getting merit may be hard too. So it's very important you don't put any expenses or income in the balance sheet here. You can see here we've got a trial balance for Aramoho Mechanics, and that's already been adjusted, which you will have done earlier, and we've also classified them, which you will have done earlier as well. Alright, so we've got current assets. What do you think MC stands for if we're at Aramoho Mechanics? MC, just a new one? That'll be mechanic costs. Remember, it's a group 1 expenses. So what we're going to do is we're going to focus on the assets first, and the assets there are a few headings for assets. First heading I'd like you to put in is this one here, our current assets. So anything with CA next to it, we're going to add in. Current assets are assets that we are going to turn into cash in the next accounting period. That is within a year's time. So all of those with CA marked on them we'll put in. First one though is going to be accounts receivable. Sorry, we'll put bank there. Second one is accounts receivable. Right, the bank is a nice easy figure because it's written on the side. So write your bank figure in. Accounts receivable figure, we've got note 1. But in today's session, I'm not requiring you to do the notes to the accounts. So, note 1, accounts receivable, we have to calculate what that's going to be. So for this figure, we're going to have the accounts receivable figure of 5,400 less our allowance for doubtful debts of 400. So that figure is going to be $500. The accounts receivable minus the allowance for doubtful debts. Any other CAs, I'll get you to write those in too. Note the car parts on hand, because we're using in car parts. These are stock that we have but we haven't sold yet. So that's why those are current assets as well. And when you're finished, you get a total for the current assets. Nice. So current assets are a heading, so we might underline that one. Our next section is called non-current assets, and underline that one as well. for non-current assets, there are actually three different types of non-current assets. Non-current, meaning you're not going to turn them into cash within an accounting period of 1 year. So you're going to hold on to them for a little bit longer. Our first major type is what? You see that in the bar. Property, plant and equipment. Now you notice that there are quite a few property, plant and equipment, but we're going to use our notes to the accounts. And what do you write here? The carrying value. So this carrying value will come from the note 2, which is your property, plant and equipment. I noticed in some previous exams they don't ask you to do this part here. They just ask you to calculate it. So that's what we're going to do today. We're going to calculate the property, plant and equipment for note 2. So we're going to type, okay, because there's only one, I've added the three parts to it. So that 10,000 there is the first one, which will be the office equipment. The 30,000 is the mechanic equipment. So that's the property, plant and equipment on the left-hand side. And minus your your accumulated depreciation. You can see we've got 13,000 and 7,000, which is 20,000. So the total figure, which will come out of your PPE note, will be 20,000. So this is an important part that's often confused. Apart from property, plant and equipment, there are two different types of non-current assets. One is called investment assets, and the other one is called intangible assets. Alright, so investment assets, there's just one of those in today's example. That could be a term deposit, but today it's not. Can you find it? And you'll see these shares. Note that because there's only one, we're going into that second column. Alright, because this is a total of investment assets. And intangible assets, see if you can find that one on the left hand side. Enter, yep, and that's your goodwill. And you can add that figure in as well, both 5,000, which will give us a total assets, which is an important figure. And so for total assets, you're adding up all of those four current assets plus all your non-current assets. And that figure is going to go in the last column because it's a key figure that we need, our total assets. And it's something that our banks will certainly have a look at, finances will have a look at. What's the value of this business? Granted, it is the cost value. Happy with assets? If not, go replay and go through that again. The liabilities, we have two different types of liabilities. First type, which is current liabilities, good. Again, a heading so you can underline that one. And so we're looking for all our CLs on the side. So it looks like we've got 1, 2, 3, 4. So current liabilities are obligations that a business has within the next accounting period, or 1 year. So most of these we're going to have to pay it, and come in advance a little bit different. In that we don't have to pay that, but we do owe a service obligation to somebody. They've paid us, we haven't done the work on their vehicle yet. And so you'll add up those ones. Accounts payable, GST, accrued expenses, that's the mechanic wages we owe, and come in advance. Somebody's paid us $2,000 and we haven't worked on their car yet. Right, what comes after current liabilities? Call it out. Good. Non-current liabilities. And normally in exam there's just one, but it's either a loan or a mortgage. In this case we've got a loan. Note that it's due 2028. So because it's 2028, it's more than 1 year, financial year from where we are. Because there's only one, it goes into the second column. And that'll give us our total liabilities. Total liabilities is important. It's the total amount of money that we owe. Let's click on right cell. Alright, so we've got total assets minus total liabilities. Do you remember what that's called? Total assets minus total liabilities. That's called net assets. So if we've got everything that we own, assets, minus everything that we owe, liabilities, that gives us the valuation of the business. Granted, it's a cost valuation, but it is a good indication of the worth of the business. We're down to the bottom part. The bottom part is the owner's equity. So what do we start with in this? Find the OE on the left-hand side. Okay, so we're going to start off with capital. And this is our opening capital. Our opening capital is given to us in the trial balance there. Because it's a key figure, we're going to put it in the third column. What do we add to capital? Alright, so we're going to put plus profit. In this case, the profit's not given to us. We could calculate it by adding up all our income here and taking away all our expenses. But we're going to do it a different way. We're going to leave that till last. What do we take off from capital? Good. Our drawings. So our drawings figure is, you'll see it over here, OE, $10,000. Notice that we put that as a negative figure because we're taking it away. And that'll lead us with our closing capital figure. Now we know our closing capital because our closing capital has to balance with our net assets. So we can type in, or you'll write in, your 23,500 there. So that allows us to calculate what our profit is. So 23,000 minus 10,000 is 13,000. What do you have to add to 13,000 to get 23,000? And that'll give you your profit figure. And that's done. Well done, my friend. Done a great job on that. So taking everything out of the trial balance and putting it over here into the balance sheet. At the end, your balance sheet should balance. It's a really good idea at the end just to put a double underline under this. So if you put a double underline, see if we can find it on font. And it's a double underline. And a double underline in accounting means it balances. Some key things is that the very important figures are in this third column, total assets, total liabilities, and net assets. And really for the owner, it's what they started with, the valuation at the beginning, plus your profit, minus the drawings is the valuation of the business for them at the end. A couple of tasks for you to do today. I'm going to give you another one of these to do. Again, an adjusted trial balance for you to write in or type in into the spreadsheet to do your balance sheet. And secondly, there'll be a Kahoot to finish it off. Well done, good job, and I look forward to seeing for you the last one, which is the cash flow, which is going to be our next session and our last session to finish off the revision. Thanks for joining me, and we'll see you again in the next revision.